All right, everybody here? We ready to go? All right. Hey, you guys, Constellation Energy, Vistra Energy, up really big today. More than 5% in early trading for Vistra, and Constellation was up a lot. And you probably want to know why the big deal, why the big moves. So I'm here to tell you, I figured it out, did a little research here. Constellation Energy and Vistra stock price... Constellation and Vistra's stock prices rose today due to the positive results of the PJM Interconnection's capacity auction. So, for all of you who do not know what this is a major auction. PJM is the largest power grid operator in the eastern United States. So they have this auction and they decide how much they are going to pay for electricity, okay? US set capacity prices at a record high for 2026, 2027. So I wanted you to know the why. And I read a comment by one of the subscribers, members, one of the really important parts of this channel, Logan. And he wrote this about a week ago, and I've been thinking, how do I want to bring this up? How do I want to respond to his observation? Because I think it's sharp. I think it's right on. I asked people to say, like, what's your process? Do you have a process? Share it with us. He said, over here, I don't have a system yet. Every time I think I do, I learn something that makes me want to start over, which is probably good. Generally, I guess on macro trends and what they will do to the whole market or sectors, then pick a quality company or ETF to suit. I really have no idea what I'm doing. Instead, I rely upon traders to impulsively act upon the market in pseudo-predictable patterns. Quite rudimentary, but I'm up almost 16% on the year. The worst part, in my opinion, is slowly figuring out nobody really knows what they're doing. People advertise themselves as sophisticated and intuitive, which pushes me to learn more. But eventually I learn enough to spot the signs. They are all bark and no bite. I loved this comment. It hit upon a lot of things that I think viewers to this channel are aware of or are thinking about or feeling. And also kind of stuff that goes on in my mind when I'm thinking about, how I present my thoughts, how I research stocks and talk about them on this channel, because I think there is a tendency on YouTube when I watch other YouTubers who do finance, who do stocks and investing channels. I'm always aware that there is, with some of them, not my favorites, but with some, this kind of thing like they know which stocks to buy next, or that if you subscribe to their course, take their class, or something like that, they will reveal to you the next stocks that are going to 10x or whatever. And, I'm aware of it. I almost get used to it, but I don't like it. And I think a lot of times when those channels especially are sponsored by somebody, it just throws that whole extra layer of profit motive in. I think it's good to make money. There's nothing wrong with that. But I think when the promise of success in stocks is linked to that program or that teaching or that class, it becomes a little bit muddied. And so, when I think about like Warren Buffett, right? He shares a lot of what he knows, he teaches, but it's not in return for anything. And I think that's really the best way to teach, is to share freely. Don't promise returns. Don't say if you do what I'm telling you to do, you're going to get a great return on your investment, because nobody knows. As Logan put it, the worst part, in my opinion, is slowly figuring out nobody really knows what they're doing. That is an extreme, I think, view. It is, I think, very true that most of what's happening out there in the markets, in Wall Street and investing circles, is noise. Very little of it is signal. And nobody knows what's going to happen. Now, the part about nobody really knows what they're doing, I'll say this, and because I feel attacked. I feel like I have made so many mistakes. I am human, so sometimes I'm going to buy stocks or I'm going to invest and I'm going to screw it up. And I just try to pull forward the little nuggets of, the learning that I can. I just take the mistake and I try to find it as soon as I can and not repeat it. You guys will know if you've been watching this channel for a while. Last year, I believed that semiconductors were really the way to go. That was the industry that I thought for the infrastructure of our digital world, for AI, for everything else, it was going to depend on semiconductors. And I kind of thought just by investing in a bucket of them, in a basket, that this was going to work out. And that portfolio, some of the stocks have done pretty well, but on average, taken together, that was a mistake. So what I learned is I do not know how to pick the sector that's going to do well this year or even next year. And so I think by learning those things, I can't promise anything, but I think that I learned something which I'm applying now in 2025's portfolio. I've been revealing to you guys some of the stocks I've invested in. I worked it from reverse alphabetically. I started with companies like Vistra and Vital Farms, and then talked with you guys about Sterling Infrastructure and the Sprouts Farmers Markets, and then Primoris Services, and I've just been working my way towards the beginning of the alphabet. None of these. One of the companies is a semiconductor, but most of them are involved in other parts of the economy. And so what I wanted to say is I think it's possible to learn from the mistakes and get better. Not that you know what's going to happen, but that you develop a way of working a process that you can stick with, and that I would hope with time you get better at it. So I may be fooling myself, and I try to remember the easiest person to fool is yourself. But I do think that this method of not just being in semiconductors, but spreading it out into different parts of the economy makes sense. And I've been working on how I identify which stocks make it into the portfolio. So what I want to share is that I do hold the same skepticism when it comes to people out there claiming to be sophisticated investors who are intuitives, who know what's going to happen next. I think that we need to be skeptical of people who say that. However, I do think that it's possible to get better, and I'll know if what I'm doing now continues on into 2026, into 2027. I know that seems like a really long time, but investment record of success is not about 1 year. It has to be built over more than 3 years, more than 5 years, believe it or not. If you really want to know who's a good investor, you've got to look at their record for a 10-year period or longer. And I know none of us, YouTube and time these days is too short. Nobody's going to be waiting around to see how well you do over the next 10 years. But the way I see it, let's look at things one day at a time, 1 month at a time, see how things are going. And so with this portfolio I'm working on, I think it started with 10 stocks, I added one. So it's 11 stocks, and 10 of them are positive, and they're pretty strongly positive. I'm going to just take a look here so I can get you an actual up-to-date number. So today, by the way, is the 23rd of July, 2025. I'm just looking here at the portfolio, opening up the app on the phone. It's up 25.52%, and that's the average of all 11 stocks. And this is something that I haven't done before, which is put together a collection of stocks that in aggregate outperformed the S&P 500. So the S&P right now, same time period, year-to-date return is 7.62%. So this portfolio is more than triple that. And one other person who I kind of pay attention to, because I always see him on, CNBC, is Tom Lee. And I think he's very bright and really on top of his investing, and also very much has a finger on the pulse of what's going on in the market and the economy. And his granny shots ETF, GRNY, is up 15.85% year to date. So this portfolio I've been working on, it's just 11 stocks, and it's up more, 25%, a little bit more than that. He's got 41 holdings, but I think what's would steer me clear of investing in his portfolio, well, first is it's doing worse than my own investing, so I wouldn't want to downshift to a inferior performance. But the expense ratio is 0.75%, which in this day and age is insanely high. I know a lot of people would like to invest alongside him and have his own ideas in their portfolio, but I just think that paying that high a fee for returns that are really not guaranteed doesn't make a lot of sense. That's just my own opinion. I think there are $1.9 billion have flown into that fund. Just to show you the power of marketing, I think this was the fastest growth of any ETF to $1 billion in assets in the last 20 years. And I remember hearing Tom Lee talking about this on a video that I watched on YouTube, and he was saying we made it to $1 billion, and now it's $1.9 billion. The amount of money that they earn off of that chunk of money, let me just find this out for you guys. 1.9 billion times 0.0075. Okay, so his fund company is making $14,250,000. So just $14.25 million to manage this. I'm guessing Tom Lee gets the large chunk of that. So just imagine making, $5 to $10 million a year as a fund investor. It's just mind-blowing. And that's to get a 15% return. So it's kind of nice that I'm able to generate a return in excess of that without having to go on CNBC all the time and talk about stocks. I get to live my life. So just wanted to share this stuff with you now. Really appreciate your comments on these videos. Logan, that was fantastic. And everybody else who writes a comment, I do read them. Please keep them coming because I often get ideas for the next portfolio reviews and the next videos that I'm going to make just from the kinds of things that you talk about. And as a segue to the next video, there is actually a video request from Logan. He said, when do you skip the ETF and just buy the individual stocks? And that will be the subject of the next video that I do. So thank you guys all for joining today. Do you guys own Constellation Energy, Vistra Energy, or any other stocks that I've talked about today? Put them in the comments. Also, I know that some of you guys, Logan mentioned a return of 16% so far. It's probably even higher because that was like a week ago. And Captain Private, you have mentioned that your returns were like 26%, and that was several weeks ago. So I think a lot of you guys are doing very well, even better this year than I am in my own investing. So congratulations to you guys. That's fantastic. And do tell me about what you're working on, anything that kind of interests you about stocks, and because I love to read about it. And the one other thing I want to say is anybody can be fooled, and remember that the easiest person to fool is yourself. So it's quite possible that I got a little bit lucky in picking the sector that I invested in most in this year. And so I think that sometimes, you think it's because of your own smarts that you're doing well, and then you just got lucky and kind of stumbled into something. So I will say that I kind of traced my success this year from last year. So I did the Ando portfolio last year, which I still own those stocks, and it's done really well. It's more than 40% since I set that up last year. And at least two of the stocks in there, Constellation and Vistra, really were like in the sweet spot of the market in energy. And so I carried one of those forward into this year. I brought Vistra forward, and I have continued investing in that. And both that and Constellation are up about 44%. Constellation is up 44.23, and Vistra is up 43.59. So they're both essentially equal. But what I realize is that energy is going to flow into data centers. And so I thought, well, if there are going to be more data centers, if AI is going to require much more of a build out for these NVIDIA chips and all the others, then why not invest in the companies that build the infrastructure, basically build the data centers, cool them, etc. So several of the companies that I'm investing in now do that. I've mentioned Sterling Infrastructure and Primoris Services. So those are two of them, but I'm investing in two others. I haven't talked about them yet, but I think going into those particular industries has been a huge boost to this portfolio. And I didn't know. I just took, I would say, I used my intuition to say, you know what, if energy is a good play, if it's in strong demand, then it's going to need to flow somewhere. Where will it flow? And so that is how I picked the data centers. And in my research, I came across Quanta Services, which is PWR, that's the ticker. And Quanta Services builds out the connections. They do the transmission of energy from the energy generator like Vistra or Constellation or Talon Energy, and they get it over to the data center. So that was another stock, just connecting the energy source to the data center. So these are things that I don't think you have to be sophisticated or smart. I just had to kind of use my intuition to think, if the demand is going to be there, who's going to benefit from the build out? So I think that picking stocks is very hard to do, but if you can think in terms of which sectors are going to be growing fastest in the next year, then you can kind of move towards that. And I think that is a much more sane and stable, kind of rational approach to investing. It's very hard to know exactly which stock to invest in, but I think that if you pick the right sector, you can invest in a collection of them, and then you're kind of covered. And that segues nicely into the next video I'm going to make about whether to skip the ETF and just invest in individual stocks. Why would you do that, and when do you do that? So stick around for the next video. Thank you so much for watching this. If you liked it, click like, please. And if you're new to the channel, by all means, subscribe, hit notification bell, and then you will get a heads up whenever I make a new video. Thank you so much for being here, and I'll see you in the next one.